You see, almost all indexes are down because a lot of hedge funds, they sell a lot of positions to generate money to buy IPO. Do you remember? On Friday, it's SpaceX IPO, Anthropic, and OpenAI. Yes, subscribe, give like to this video. Chat is open. Yes, I see. You're asking about SanDisk. Still up. It's going up a bit, yes? What would you do with SanDisk? And today, don't forget Oracle. We'll see Oracle earnings report. What do you think? What will it do? If Oracle goes down like a Broadcom, the whole market can go down. That's why stay tuned, we'll see. Chat is here. Yes, you can chat. Don't you see? Everything's fine. See what's happening with. Did you make money? You made 1,000 today? It's perfect. I see your chat. Over the last 3 months, based on the correlation between the S&P 500 and the S&P 500's tech sector, like 96% certainty, you could basically know the direction of one if you had the answer of how the other had done. Well, over the last week, quietly, the IT, maybe not so quietly, the IT sector is down 9.6%. I see you made 1,000. It's good. Yes, subscribe, give like to this video.
But as that's happened, consumer staples are up 4% over the last week. They're up comfortably now over the last month. They're up over the last 6 months, and they're closing the gap year to date. IT is only up 13% now year to date.
That's why if you have position, yes, I see your question. Yes, it's better to close, take profit.
Have not been correlated. They represent very different sides of the risk spectrum. And we talked about before, if you're a portfolio manager and you have to be invested in equities, you're kind of faced between that choice, low beta or high beta. But if you're a retail investor, you don't have to go to consumer staples. You can go elsewhere. But right now, consumer staples seem to be working.
Yeah, I mean, and as Sam highlighted when she was running through the market action right at the close there, I mean, it wasn't a full sell-off today. We saw consumer staples, we saw energy performing well. But yesterday you highlighted that despite the index being down, we had 67% of the companies higher. What did that look like today?
Yeah, way worse today. Only about 35% of the names are higher. You saw real volatility expansion. Still not a full correlation, one sell-off type of a day. Definitely doesn't have that crescendo-like feeling to it, but more traditional selling today than we have seen the last week.
All right, let's dive into these Oracle numbers coming right across the wire right now.
Take a look, Oracle. Wow.
Look at their EPS. It's coming in at $2.11. That's better than the $1.97 that was expected. Revenue coming in at $19.18 billion. That's better than the estimates looking for $19.09 for their fiscal fourth quarter. Let's break down some of this revenue. Software support revenue coming in at $4.94. That is slightly below the expectations, looking for $4.98 billion. Software licensing revenue, $1.88 billion. That's also below the $1.93 billion the street was looking for. Margins, very important. Operating margins coming in at 45%, slightly better than the 43.5% the street was looking for. Operating income coming in at $8.59 billion. The estimate was looking for $8.27. So that is better as well. Here comes cloud infrastructure revenue, that IaaS number, $5.79 billion. The estimate was for $5.72 billion. So better there on one of their most important metrics. But a few misses in there, and we are seeing a move to the downside here of 6.7% as we see some of those revenue numbers coming up a little bit short here. Alex, what are your thoughts here of these just initial numbers that we're getting right out of the gate?
Yeah, I'm not sure they're good enough. A big part of this story is going to be guidance, but we've talked about this with names like NVIDIA, which I know are different, but what has kept those stock stories going was the constant ratcheting up, the constant beating, the constant guidance raises. Well, Oracle has been on the other side of the spectrum of sort of the, you know, if I was going to be bearish on AI, maybe a name like Oracle would be a name I use to describe why, and the reason being is they have a bunch of obligations that they have kind of pre-sold in their backlogs. We talked about this with Supermicro this morning.
Put
and
in
then they went
comments.
to the debt markets to basically front load the capital in order to even hope to meet those
Let's see what's happening.
obligations. It's an example of the more leveraged side of the trade. And the only way that the leverage really pays off is if you
Let's see what's
constantly
happened.
see growth and you constantly ratchet things up, which they had done when you
And
saw that
if Oracle is
tremendous
down, the
run-up
whole
in
market
stock
can go
price.
down.
It had that huge guidance adjustment, and it was like, oh, Larry Ellison making tons of money and all that stuff, and the stock went up like 40% in one day. It was because they ratcheted that story up. I haven't seen guidance figures yet. I do see a current quarter guidance for EPS, and it is
crazy
better
down.
than expected, but it's marginally better than expected. I do think IaaS, infrastructure as a service, is a very, very important segment, and the fact that they're meeting or exceeding those numbers is important, but it needs to be much better than this in the guidance for them to maintain the stock price.
All right, I've got some guidance for you here. For the current quarter, forward looking to Q1 fiscal year 27, revenue expected to grow 27 to 29%. Total cloud revenue expected to grow 57 to 63%. And they are looking for non-GAAP earnings per share to grow 16 and 19% to be between $1.71 and $1.75.